Okay, let's dive right into this explainer. We're looking at a really fascinating proposal by Dr. C. Gothanda Moorthy today. It's basically a complete reimagining of India's indirect tax system, shifting it from what the author describes as a punitive trap to, well, an automated, fair partnership between the state and its citizens. If you've ever felt completely overwhelmed by tax compliance, trust me, this proposal is going to be incredibly interesting to you.
Dr. Moorthy actually opens with a pretty powerful philosophical point here. He argues that when citizens understand exactly what they pay and why they pay it, taxation becomes a civic act, not just a forced sacrifice. But right now, India faces a massive trust deficit. You see, the current design kind of alienates the very people it's trying to involve, treating businesses more like suspects than partners. And when that foundational trust breaks, compliance completely collapses, no matter how much new technology you throw at the problem.
So, to grasp this massive proposed shift, we're going to break it down logically. We'll start with India's current tax trap, then introduce the MVAT solution, see how MVAT actually works, explore the power of IMS, and finally look at the big wins for businesses.
All right, starting off with Section 1, India's current tax trap, and specifically, the problem with backward liability. So, here's the fatal flaw in the current GST system: backward liability. Right now, a buyer's ability to claim their input tax credit completely depends on the seller actually paying the tax to the government. Think about that. If your seller defaults or just vanishes, you, the totally innocent buyer, lose your credit and you're forced to pay the tax again. The author calls this an elaborate gamble. Honest buyers are punished, and businesses are basically forced to act as private tax enforcers for the state, chasing down invoices instead of, actually focusing on growth.
Which brings us to Section 2, introducing the MVAT solution, a major shift to seller-only liability. Looking at this contrast, it's pretty stark. On the current GST side, you've got backward liability, complex multi-stage credits, and the buyer taking on all the risk. But the proposed MVAT, it's totally different. Under MVAT, liability strictly follows the person actually performing the taxable act, the seller. They calculate and pay tax based solely on the value they add, zero backward tax burden, meaning the buyer is completely freed from worrying about whether their supplier paid their dues. The crucial takeaway here is simple. If you add value, you pay tax on it. If you didn't, you don't. It literally removes your dependency on anyone else for your own compliance. You're no longer tied to those complex, cascading input-output chains that make the current GST so messy. It's entirely self-contained.
Let's move to Section 3, how MVAT actually works. We're going to break down the math. The proposed system divides goods into two main buckets: raw goods and finished goods. Let's say we have copper, a raw good. Under this proposal, raw goods can only be sold by the government or its authorized agencies. This ensures full billing at the source, effectively killing the black market. The government applies a flat 25% tax on the cost, so a 100 rupee cost becomes a 125 rupee MRP. Now look at the finished good. A private seller buys that copper for 125 rupees to make, say, a cable. They want to add 50 rupees of value. Under MVAT, they only pay a 10% tax on that specific 50 rupees of value they added, which is just 5 rupees. So the final MRP becomes 180. They aren't paying tax on the whole 175 desired price, just the 50 of genuine value addition. It completely avoids the cascading double taxation of the old model.
And this leads to a really beautiful concept, transactional finality. Meaning, once you buy, you buy. Your responsibility ends right there. You are never held liable if your supplier later defaults on their taxes. Tax accountability stays solely with the one who collects it. It protects innocent buyers and brings deep, genuine trust back into commercial transactions. Okay, Section 4, the power of IMS. Because of course you need technology to actually enable all this.
You might be wondering how on earth the government tracks all this without endless paperwork. Well, INMIS is the invisible backbone of the entire proposal. It stands for the Indian Bill Management Information System. Instead of a seller trying to manually guess or compute the tax due, the centralized system does all the math. It constantly cross-verifies a business's documented bill of materials, like the exact breakdown of raw materials used, against their digital real-time inventory. It makes fraud incredibly difficult because every single invoice has to be backed by actual physical stock records.
And for a business owner, this builds a beautifully frictionless life cycle. Step 1, you just run your business, making sure your material records and digital inventory are up to date. Step 2, IMIS works in the background, instantly cross-verifying your data and auto-calculating the exact tax on your value addition.
Any fake invoicing gets flagged immediately. And step 3, at the very end of the quarter, the MVAT bank automatically debits the tax due. You never have to stand in line or wrestle with a clunky web portal.
Let's wrap up with Section 5, Big Wins for Businesses, looking at the actual economic benefits of this new regime.
Okay, this is honestly one of the most exciting financial aspects of the whole proposal. 0%. Because that auto debit we just talked about doesn't happen until the quarter ends, the tax money you collect acts as a zero-interest working capital loan for 3 whole months. That money stays with you until settlement, which instantly improves your business's liquidity and reduces financial stress without violating any tax ethics. Your money actually works for you before it works for the state.
Stacking all these benefits together, the picture is incredibly clear. You handle only what you directly control. The technology handles the math. You get a liquidity cushion. And maybe best of all, having these clean, structured records makes you permanently audit-ready. This protects you from what the author literally calls tax official terror. No more arbitrary harassment or subjective field investigations. It creates a level playing field where you can just focus on growing your business with total peace of mind.
And hey, the government wins too. The state transitions from a feared tax enforcer to an actual service provider. They get a clear, traceable VAT regime where human error is practically eliminated by IMIS. Collection is smooth and automatic. Tax officers don't need to do aggressive field rates anymore. They can just run swift, data-driven audits from their desks based on inventory anomalies. This means stable, predictable revenue for actual nation building instead of constantly chasing evasions.
So we'll leave you with this final provocative thought from Dr. Moorthy's proposal. India doesn't just need another tax patch, right? Or some new software portal slapped over a broken philosophy. It needs a total reset, a system anchored in self-liability, clarity, and automation. Because when taxation becomes logical, predictable, and fair, it builds a stronger relationship between the citizen and the state. It builds nationhood through trust. So what do you think? Could this MRP-based VAT be the ultimate solution to indirect taxation? It's definitely a compelling vision of the future.